presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-873-7618.
Hey, Robert, how you doing, man?
Yes, and thank you for taking my call. I wanted to let you know that I've been a subscriber for a couple of years, just different members of your team, and I really enjoy it. But really the reason I'm calling is to express my sincerest gratitude for you providing that information yesterday on the small business grant. I'm a small business owner and primary breadwinner for my family, and if I can get that money, it's going to really mean a lot to my family. So
that's awesome.
Thank you for taking the time to do that.
No, well, listen, man, we appreciate you growling and prowling with us.
Now, Tom O'Brien.
Hi everyone, Basil Chapman sitting for Tommy O'Brien. It's my pleasure to be here. I am the author of the Opening Call Daily Newsletter, and I have my show at 10 o'clock, the Tiger Technicians Hour, every market day. And let's get to the market. The Dow is up at 285, 44,540. It's hitting this trend line resistance. It made basically a double top. I'll just do this real quickly because it's what I've been discussing for some time, that there's a chance that we made a kind of internal high and then a residual high just below it, and that said they should pull back. But this, we've done the same type of thing over here. That went sideways for a little while before it broke down, but so far this is... The Dow had been one of the weakest in then the Russell 2000. The IWM was the next one. IWM, in fact, it was much weaker than the Dow, but the IWM today is having a very nice move to the upside. IWM is trading up to 92 at 223.94. Very good action. Weekly chart, this is the daily chart on the left. Weekly chart with all Chapman wave notation. On the right is the monthly chart in the strong leg A to the upside. And we might be seeing over the next week or two going into August that the Russell 2000 small caps are actually starting to find their own way here under the conditions, with some of the leadership really getting extended, still acting very well. Let me just show you the S&P made a new high today. So that we are long, in fact, 4 or 5 of our positions are at all-time highs, but I thus thought that there was this potential for a triple top right here with the resistance line that the S&P would pull back. It did pull back. We had just a small 3 times long position in the S&P, long, the short position, SPXS, made 2% a little bit, and then got taken out 2 pennies lower, so it was really more waste of time than anything else. But here we are at a new all-time high. And this particular pattern here is something that has to be monitored very closely, because if there is a spike from 6303 to the 612 area in this particular up move now, there could be a new wave count completely, because we've taken out the trough from D. I don't want to in my show tomorrow, I'll go through it much more carefully, and the 10 o'clock hour. It's actually Fridays are technical Fridays. Chapman wave methodology gets explained in detail, so it would be a good time to listen. So here we go. QQQ, as I said, all-time high. S&P all-time high. Dow's not there. QQQs are there. They've just recycled. So this is now E, A, F, G, G/C. This is now a leg D, a new leg D. G/C goes to a D. Just, you don't have to know about that. Just to say, excellent action. Look at this weekly chart. This is only the second leg up. The first one ran from 400 all the way to 5, I think it was like 530. Pulls back for 1 week. This is a weekly chart, just a fraction, and then starts a new move. It's almost like a single move in the upside to a leg B. And in the buy mode, in the Chapman wave methodology, you anticipate at least 4 higher peaks. So C would be the next, and then D, and then other things can happen. But look at this. SMHs, the semiconductors. Semiconductors, this is still, it's the same thing, was barely a move. Peak A right there, and now it's in a leg B at all-time highs. This is quite remarkable, and the daily chart has not taken out 3 days ago, the high of 3 days ago, 293.20. It's the high today is 292.56, just underneath that, but it's acting very well. I'll come back to that in a moment. There was a question about it, and I do wonder, what am I skipping here? I did that. Yeah, NVIDIA is at an all-time high at 173.31. In a leg E in the daily chart, it's only a leg A from 86 every single week since it made that higher in the week of the April the 11th. You can't count that as a peak because it hadn't started a right side move to the upside with a higher low. Now you can count, and the count is every single week there has been a higher high. So this is still leg A, becomes a peak A if there is a lower high on the next bar. And this is still amazing. The monthly chart has just broken all resistance levels. So that says that the support, shorter term support would be, it's at 173 between 162 and 160, closes under 160 and can go into an intermediate term, couple of weeks of digestive phase, but right now that's at all-time highs. I do want to go to gold. Gold's come back a little bit. It's down 14 after being down to the 33.14 level, right on the trend line, this Chapman Wave inside track propellant zone. I didn't put this in. It started to look a little messy, but I'll do it right now. So this is the line that I always draw in. And then I make a little narrow channel, and that channel becomes a propellant or a repellent, depends on the way up or down line. And there it is, held, and now it's pushed up. And the 9-period moving average is still weak, so we're going to have to see, because if gold goes under 3,300 in the next few days, then it's due for a little bit of a timeout, especially in this H pattern in the weekly chart. But so far, this is good action in that it's holding just sideways. It's really digesting huge gains. Silver, on the other hand, has a different chart formation. If I'm correct about this being a peak C, there should still be a higher high in silver in the continuous contract above 39.57. But if it suddenly at this particular point takes out 37 as support, it's at 38.43 right now, 31 cents. That's the problem. Look at the weekly chart, still very strong. Monthly chart took out a very long multi-year, almost a decade, I think it is. All the way back to 2013, 12 years. That's where it was, where the price is right now. That's where it was 12 years ago. Let's go to high-grade copper. High-grade copper is trading about unchanged at 5.50. The other thing we need to look at, and then I've got some questions that I'm going to get to. Oh, of course, the TLT. The TLT right now is trading down 13 cents at 85. The TBT, which is the inverse, is doing quite nicely. It did make a peak B. If at any point in the next few days, I would say if it goes above, but I would rather say that if it closes above 38.37, the high of the 16th yesterday, that would be very positive for the yields going up. We want to see yields going down. So this is something to be monitoring very closely. And when I talk about the dark news index, this is something that I developed, a long time ago. Basically, you start to see sort of little wispy clouds, and then suddenly something becomes so dark that the market says, it's a problem. But it's not a one-off like yesterday when you pulled down and you came back up. It sustains itself, and that becomes a sell-off. We haven't seen anything like that for quite a while. I'll be back in a moment. Basil Chapman sitting in for Tommy O'Brien. This is the Tom O'Brien Show. See you in a few moments. The Dow is up.
If you spend any time online researching trading techniques on how to begin your trading journey, you've no doubt come across many folks who push Forex trading as a way to make big money quickly. Unfortunately, there are equally as many stories of these so-called Forex professionals just looking to make a quick buck off aspiring traders without actually teaching the ins and outs of the Forex market. This is what sets Teddy Keckstad's The Tiger Forex Report off the riffraff. Every Monday, former Chicago Mercantile Exchange member and author Teddy Keckstad releases his Tiger Forex Report newsletter, where he dives into the complex world of Forex and takes time to actually teach you his methods that have made him so successful in the fast-paced and rewarding world of Forex trading. Furthermore, all subscribers receive access to archived live streams of Teddy's, where he provides university-level education to help you in Forex trading. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Forex awaits.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter, a must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the Newsletters tab on the front page of TFNN.com. TFNN, educating investors.
Are you ready to take charge of your financial future? TFNN is your gateway to the world of trading and investing. Whether you're starting out or scaling up, TFNN empowers traders and investors of all skill levels with top-notch investing systems, strategies, and techniques. It's time to protect and grow your money with insight you can trust. Join us live Monday through Friday during market hours for exclusive content that moves with the markets. At TFNN, we bring the trading floor to you. Our seasoned hosts are here to answer your calls and questions live on the air. Check out the Tiger's Den for just $1 and follow us on YouTube and become part of our vibrant community. And remember, at TFNN, we're so confident in the value we provide that we offer a 30-day money-back guarantee on all new premium newsletter subscriptions and services. You have absolutely nothing to risk, so why wait? Tune in live to Tiger TV and transform your trading journey, because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors.
Hi, folks. I'm just notating. I have on my left here, I have a scanner, and this is iShares Russell 2000 Fund. And look at this. This just popped up here. And I've seen this a couple of times over the last couple of days. The telecommunications area just seems to be doing so well. So look at this. You got yourself Lila, L-I-L-A. This is Liberty Latin America Limited. A-shares, video, broadband, internet telephony, mobile services, just breaking above the 200-period moving average for the first time. It tagged it a week and a half ago for the first time in ages. And now it's just sort of breaking out. So there's so many. That's the whole thing about this market. There's been a rotation to the extent that money is starting to flow in. And you can see that because, so I just wanted to show this just as an example of an area that, look at the chart. It was a horrible chart. All it was, the monthly is still terrible. The weekly is improving. Look, the 9-period moving average actually crossed positive, and the stochastics at 81%. That's good. And this little spike today. So I'm just pointing out that we've seen this broadening in the market, and here we go. Look, Bitcoin is at the high of the day, up 535 at 120,200. So it made a double top high. It's made a cup and handle. Not one of my favorite patterns, but we are long through the iShares. And look, here it is. 20, like 3,000 or 4,000 off its all-time high, like 3 or 4 points if you've got a couple of zeros away, and it's doing very nicely, and that has spurred a whole bunch of certain areas. For instance, mentioned in the DEM, ETH. Look at this chart. This is Grayscale Ethereum. It comes out as an IPO earlier this year. It in the 32 area, it plummets down to the 13s. And it's just gone straight up. Peak A, peak B, and leg C in the weekly chart. Look at this, a brand new buy signal to buy mode in the daily chart, up in the leg D. High today, 32.54. It looks like this month it wants to tackle the left side high right there. That would be all-time high for this particular instrument, 38.78. It's still a way to go, $6. But look at this. There's a lot of power. And that's what I'm saying, that in calling a market top, it's really difficult because money just keeps flowing into different areas. And when you're thinking about the heavy selling that occurred earlier in the year, and that's, for instance, look, here's Wayfair. Wayfair slumped from the 57s last year. It was actually once up in the 300 area. Slumps from the 57 double top in October, November into December this year. cascades down to 20, and here it is, makes this peak D at the 59 area, pulls back, having a good look at the 9-period moving average held on the pullback, so there could be a bounce, and there is a bounce. And what's fascinating about this is that the monthly chart is still horrible. Weekly charts improved a lot, but the daily chart looks fantastic. So is there room on any serious multi-week pullback for other areas to really garner strength? You bet there is. Look at ARKK, an instrument that we've had periodically. We don't have it right now. We have other things that kind of mimic that particular chart formation. In a leg after the upside, hit 76.60. This is a stock that once was 125.86 in November of 2021, plummets down to the 29s, and now look at the stair-step move in the monthly chart. Higher highs and higher lows, keeps coming back, takes a long time every time it's had a breather, months. This last one was 4 months. The fourth month broke to a new high. So you're starting to see a rotation that says the public is in. And one of the reasons why I say that is if you look at Robinhood, and this has to do partly with the crypto and the gold stocks, etc. But look at this, all-time high as we speak at 106.22. So I was asked about it just before I mentioned that I would be subbing for Tommy today, if I could go through the chart formation. So look at this. It's walked the 9, this green line is the 9-period moving average. It's just walked the 9, barely has it touched the black line, the 14-period moving average. To me, this is the most amazing indicator. Look at this, you'll see it much better here. If I go like this, and I put in hood. So what I did the other day is I did a measured move to say each huge up move, where does it stall? So I thought I'd do a measured move from that low to here, and then this low to where we are. And this month it says this is about the area that you'd start to see it take a bit of a breather. However, I want to get rid of this. I forgot that I put those on. Those were just, for me, I like to toy around with measured moves and like to sometimes Fibonacci, and I do different things. But in this case, walking the 9-period moving average. Green is positive. Pink says it's gone negative underneath the 14-period moving average. This is above. Isn't that something to behold? Look at GE. Oh, and I should mention, we still have our long position from the 16s in Robinhood. Missed some very nice trade. Oh, I did the same thing with GE. So GE has the same kind of thing. I'm going to move this away because that was just an experiment. I haven't finished working on this particular measured move. Okay. So, why is that 2 of them? All right, let's get rid of that. Wait a minute. How many of these are there? Oh, there it is. Okay. Look, green, green, green. It went pink just for a moment, and now it's back to green. But GE today had a big whippy move up. It went all the way to an all-time high of 272.80, and then it had a low of 258.16. It's trading now at 61.74. So my anticipation is that there are going to be clues in this market to when we start to see some kind of a digestive move, because there was evidence the Dow is still in that phase. It hasn't broken that trend line yet. But if I can see what happened to GE, now you've got my charts with the daily, weekly, monthly. Look at this. Big red candle, biggest red candle we've had in quite a while. Leg C in the weekly, that means it should still go to a D. And a leg E in the weekly, but that could even be an alternate count. GE Aerospace trading down 4.47, 4.65 right now, 261. This is important. If I start to see, say, Robinhood have something like that this coming tomorrow or the next couple of days, that'll be another sign to say, whoops, now the selling is just starting to come in. Look at Microsoft. So we're along GE, we're along Hood. And Microsoft, which we're also along from the 338 area, is trading at 512, all-time high. And look at this move right here. It's walking the 9-period moving average. What a lovely technique that is if you want to use it. And I'll be talking about it a little bit more in my show tomorrow at 10. So look at that. It gaps up, and just using this one technique from this high of the 25th of April, at 292. Let's go to the high of the day. Let's go to 392. If you were just long all the way, you'd be long today at the high, just using this one particular tool. You wouldn't have to do anything. You just sit there saying, very nice. But there's a point, and this is what I want you to talk about today, just briefly before we go to Tim Ord. When you're looking at your portfolios, and just imagine you've got a couple of stocks that are doing real well, and every day, just you see it getting bigger and bigger. But there's a moment where you say, wow, I'd just like to freeze this right now. You don't have to go up anymore, but I don't want you to go down. And that's kind of tough. So Tommy spoke about that with NVIDIA this morning, a really good thing. Listen to that program. It was very good on options. I'll be back in a moment. Dow's at 252. Just pull back a little bit. Be back with Tim Ord.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern. For free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
This portion of the Tom O'Brien Show is brought to you by Direxion's daily leveraged and inverse ETFs. Whether you're a bull or a bear, you choose the direction. Visit Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
Hi folks, Basil Chapman here. Dow's up 253, S&P's up 37. We're going to be watching the 337 time frame to see if we can get a Chapman Wave 352, which might take the market up to the high of the day. We'll see. Meantime, we've got Tim Ord on the line. Everybody's waiting. Hi, Tim. How are you?
Good. Glad to be on again. So
good. That's great to have you, Tim. Before we do anything else, can you just update people and tell them about the Oracle? Just if you can give them a way of contacting you or seeing your work.
All right. Yeah, I'm on Twitter. Just I think it's Oracle. If you want to find me on Twitter, my website's ord-oracle.com. And over the last 4 years, we outperformed the market. The S&Ps last year, I think we're up 29%. The year before, up around 28%. Markets were up, around 20, 23, somewhere in there. So,
right.
And this year, we're doing pretty well. So, anyhow, that's our performance. So, been in the business a long time. Got in business in 1977. So,
I know that I used to listen to you when I was playing tennis at 3 o'clock in the afternoon. Every once in a while, out in the courts, and I'd have my little radio, and I'd be listening to you and Tom discussing the market. It was fantastic. So, Tim, can you start updating us right now with your work?
Right.
I'm going to put the charts up here so I can see them. I believe Al's already got them organized. Very good. You got the first chart.
Right, the SPY. This is actually a 39-minute SPY, and it shows up the best. You can do it daily, but anyhow, the pink area right here, this window is the 39-minute SPY. The bottom window is a 39-minute VIX. And anyhow, VIX trades the opposite of the SPY. So if the SPY goes up, VIX should go down. And so today we're hitting a new high on the short-term new high on the SPY, and the VIX is making a lower high. It should actually be making a lower low. This divergence has been going on since about July 11th. So it's not a huge divergence, but they start out small. So usually I like to have at least two different indicators that are not related, give kind of the same signal. So anyhow, the VIX should be making a low. It's not. It's making a higher low while the SP is making a higher high. That's a negative divergence. Chart number 2, I showed this last time. This is the bottom window is the daily SPY. Next window higher is the SPX tilt ratio. So it's the equity market against the bond market. That's what
in daily charts, yes.
Yeah, it's a daily chart. And I put an RSI on the SPX tilt ratio. And every time it gets above 70, we're at 79 right now, 77 or 79 and change. But if it gets around 70, if you can look here, this one didn't work. It actually works 80% of the time. This one actually picked out a pretty decent high. That stopped the rally, went down for a couple, 3 weeks, went down immediately there. Kind of bearish there. This flipped the market sideways. You had a bearish decline probably a couple of weeks there. Anyhow, it's doing the same thing again. We're up again 79. So you got the VIX, a bearish divergence, and you get the SPX tilt ratio, RSI, at a bearish divergence. So the upside really limited here. And also we're entering into a seasonality period that's actually, we're entering into the weakest quarter of the year. And this quarter lasts until October. So I'm thinking what's going to happen. This is a chart. This is a weekly chart SPY. And so I'm thinking we're making a high right here, right now. Nothing real significant because we broke above the February high back in February on increased volume. Okay, when you break a previous high and increase volume and you close above it, normally that's a breakout to the upside. And if you notice, we pretty much rallied from the April low all the way up until we are right now, and really haven't had a consolidation. April,
correct.
You just went straight up, more or less. And so there's always a B wave. In other words, a B wave is a side wave. You have an A wave, which is an impulse wave, have a B wave consolidation normally, then you have a C wave that goes up even higher. C waves
are usually very strong, right?
Yeah, and I think that's coming. But I think we're going to flip sideways here. I think we're making a high right. I was still up my position, I think it was, I don't know, Monday, Tuesday this week. So I'm actually flat right now. And I don't think there's a huge decline here because the previous highs was a breakout, a confirmed breakout to the upside. It did everything it's supposed to do. So I think we'll pull back, but a pull back, 608, 609 in that vicinity. And I think we'll probably drive a B wave right here. And this B wave may last possibly into, I don't know, September, October. And we really don't go anywhere. We really had a big rally up. We're due for consolidation. We're entering into the weakest quarter of the year. And so I think we just don't do a whole lot for the next several weeks. It's just, can you short? Well, you're going to find support at the previous highs. And so it's not a huge downtrend, but it'll make it, the sentiment right now is kind of leans a little bit bearish too. So anyhow, upside right now is not much. I do have a target later on after we find the next, once this consolidation ends, which I think will be in October sometime. I think the next run up will take us to 740, which is pretty much, which is basically what we're doing right now. I'm thinking this is the halfway point of the next move up on a big time frame. So if you do those statistics, you come out around 740. So I think a huge rally is going to start. And normally huge rallies start with a lot of panic. The market doesn't have to really go down to have panic. But I bet for this all over the 10-day trend, which is how I measure panic, trend readings above 1.2 show panic. If you get a 10-day period, which is basically 2 weeks of panic, I bet that trend gets at least 1.2, if not higher, before the next rally starts. And that's what I'll be looking for. Right now, the 10-day trend, I think, is coming in around 105. It's fairly neutral. It's not saying a whole lot. But anyhow, that's what I'm expecting. Nothing real bearish here. Just a consolidation and an uptrend. Support, it depends how you draw your trend lines, probably 608 on the SPY. And the next trade is worth catching because it'll be just as big as the April run up from the current high. So it looks promising, but doldrum between now and October.
Can you hold on for another segment?
Sure can.
Great. We'll be back with Tim Ward from the Ward Oracle. This is Basil Chapman sitting in for Tommy O'Brien. The Dow right now is up 251. S&P's up 38, and we're going to get to the 337 time frame, going to 352, which is going to be very important, and we'll discuss it later in the show. I'll be back in a moment.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors. For traders who crave risk, Direxion's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times a daily leverage, utilize bull and bear funds from both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting designed for short-term trading, not long-term investing. Whether you're a bull or a bear, you choose the Direxion. For up-to-date pricing and performance, go to Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter, a must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the Newsletters tab on the front page of TFNN.com. TFNN, educating investors.
TFNN has launched the Tiger Zen, hosted at Discord. TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger Zen, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Tom O'Brien.
Folks, we're back. We're on with Tim Ord. Tim, what chart would you like to go to next?
Let's take a look at the gold market. It's kind of a repeat, but here's the XAU going back to 1988. So it goes back a while, and all it is just the RSI of the monthly. This is a monthly XAU RSI. Anyhow, so I marked the times with red dotted lines going back to 1988 when the RSI got above 70. We're at 70.97 right now. The June high came in at 71.3, so we're still there. If you notice, market has really had made any headway since. At least on the, or actually, at least on GDX.
Kind of gone sideways all of June and July, yeah.
Yeah, it's just gone, actually since April, mid-April, it's gone sideways. Right. So what's all that mean? We're probably going to pull back down to support. That's all. It's just a consolidation and an uptrend. So the monthly charts rule the weekly charts rule the daily charts, and all the way down. And so if you get a signal on the monthly chart, that's a lot more important than a weekly chart signal. So now we got a monthly chart. I'm not a big bear at all. I'm just saying we're going to consolidate at some point and probably pull back, at least on GDX, around 175. Let's take a look at the next chart. This is the monthly GDX. It's 5112. Here's the April high. It hit, I don't know, looks like about 53. Went a little bit higher in June. Looks like it hit 54 and change. But anyhow, I do a lot of volume studies. Anyhow, what I'm talking about here, 80% above the Bollinger Band. In other words, I tried to sell about 80% above the upper Bollinger Band. So I was a seller up in this 50 or 52 range. I got out about 50. Then once it did, it backed off lower, but it still closed above the outer Bollinger Band. And normally, the farther you away from the mid Bollinger Band to the outer Bollinger Band is 2 standard deviations. You get past that, the market gets really extended. And so the market really had a decent run up. A lot of stocks, gold stocks, have done well over the last year. And so we need to consolidate a little bit. But anyhow, this April high, in June, we tested the April high. If you notice a big drop in volume, it's about a 30% drop in volume, and you close below the April high. So what that says is if you can't take out the previous high on higher volume, it'll attempt to take out the previous low. Well, the previous low is also the April low, which comes in around the 40 range. So I think that's probably where we're heading. This month, we're not closed yet, but in July, this is a possible bearish engulfing pattern. So if we close here or lower, it'll draw a candlestick pattern called a bearish engulfing. And so that's another kind of a bearish, this is a bearish I forget what you call it, rising star or something. It's a doji. Dojis at tops are bearish. So now you got to test the previous high and higher volume. You could end up with a bearish engulfing. So what I'm thinking over the next couple 3 months, probably a low in October, because seasonality a lot of times marks highs in gold in the October time frame. So that matches up with the equity market pretty well. So this market could have it'd be about a 20% pullback. So, but this is still in an uptrend. Nothing really to worry about, my opinion, on the longer term. But over the next couple of months, I think you're going to see a pullback. The next chart, this is a bullish percent index. Now, the bullish percent index measures the point and figure buy and sell signals. So, in other words, when I drew this chart, 96.4%, 96.43% of the stocks in the gold miners index were on point and figure buy signals. Well, you'd think that'd be bullish. Well, it's not. It's actually, if it gets up around 95%, I marked those times in the past going back to 2006, and all of them put at least a short-term high in. So I'm thinking this, even though the market's strong externally right now, is actually too strong and needs a rest. So this is another reason why I think you'll get the pullback. I'm currently kind of out of my seniors. I'm still in my juniors quite a bit because the juniors are doing fine. But anyhow, the juniors are playing catch up. Here's another indicator. This is the RSI of the inflation deflation ratio. Kind of the same thing. This is a weekly RSI. Here's the inflation deflation ratio. This thing going on right here. I actually don't do statistics on it. I measure how fast it goes. So I use an RSI on it, and we're up. We hit 60 right at 69. We're at 65 right now. So we're starting to back off a little bit. This is a weekly chart. I think last week we hit 69. Is that close enough? Yeah, in my opinion, because we got other indicators saying we're probably going to pull back. But kind of the same story. I think XAU 75, GDX around 40. But several different indicators suggest that we are going to get at least a pullback here. But this is a pullback on a bigger uptrend.
In a bigger uptrend, right, yes.
Yeah, it's a lot of these monthly charts are just turning up off the lows. And monthly charts usually don't do whipsaws like dailies, sometimes weekly can. Monthly, you very seldom get a whipsaw. Yeah, once they start turning up, they'll stay up for a long time.
So before we run out of time, I'd like you. Is there something in the chart number 8, the last chart? Because this flat, long, sideways pattern. I'd love to hear what you say. Because the longer you go sideways, sometimes when we break to the upside, that can be quite powerful.
Yeah, I think we actually have broke out to the upside. The market's really gone sideways from 2020 to 2025. Can we have a 3-4 year rally? I was expecting at least we go up to 2027. Next time around, I'll show that chart and the reason why. I don't think that'll actually even be the final highs, because I think there's a good chance this is probably similar to 2020. There's a great big 12-year cycle in the gold market that started in 2020, ran to 2012, where we had a high in 2012. You had 12 to that, you come at 2024. So there's a great big 12-year cycle. So there's a chance that 12-year cycle actually started from the 2024, and you had 12 years to that. But that's kind of, that's a big statement to make, I guess you might say. So I don't want to say that's going to be out the case, but there's a chance that could be the case. But I do think we release rally of 2027. We're still fairly early in the this big run up. Not in the next 2 months, because the next two months I think we're going to consolidate. But this is a big beginning. Here's I do one stock here real quick.
Sure.
This is a DBS. It's Dolly Van Durden Silvers Corporation. And this is the one that really hadn't gone anywhere for the last couple of years. And I think we're breaking out right now. The symbol is DVS.
This is trading at $3.74, folks. Yeah, it does look good.
Yeah, it's similar to KMI and ATRO if you do pattern recognition.
Very good. Well, Tim, thank you so much. Always fabulous information. I'm sure the listeners are already looking forward to your next session, which will be on Tuesday, right?
Yep, next Tuesday. Talk to you then.
Have a great weekend, and thank you for that information. Folks, that was Tim Ord, and he'll be back on Tuesday. Check him out, Ord Oracle. This is Basil Chapman sitting for Tommy O'Brien. I'll be back in a moment.
There's many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
In the world of trading, only a few names stand out like Larry Pesavento, a pro's pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter. A must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the newsletters tab on the front page of TFNN.com. TFNN. Educating investors.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Folks, Basil Chapman sitting in for Tommy O'Brien. I see that there's a message in the Dan Ello says, he just posted, breaking, U.S. House passes crypto market structurable and stablecoin bill. So we're looking at, right now we're looking at Ethereum, which is up 45 cents at 32.35, but it isn't leg D, so just got to be short term. You've got to be a little careful here. You've got Bitcoin. Has it made a new recovery high? No, it's stalled here at down 140 at 119,490. So as I see it, so let me just give you a brief update to everything I'm looking at here. Number one is the Dow has not yet broken that little resistance level. If the Dow at 44,000 498 takes out the 44,855 all-time most recent high. That's going to be very positive. But right now, it's just there's a chance that it might stall a little bit here. The S&P did go to a new high, and that's really important. The S&P right now is at 6,300. And introducing the 300s there, 6,300, very, very strong, nothing technical that's negative. If in the next 3-4 sessions it actually closes under yesterday's low of 62.01, that's going to be a problem. But so far, this is good. The QQQ NDX 100. Now, what we are looking at is there's, as I said, a little bit of a rotation here. QQQ's all-time high. That's positive. The AIQ is doing very well. It is almost at an all-time high. That's the Global X Artificial Intelligence ETF. I would love to see it in the 45s. Just to say, I've left those 42s and 43s alone. I'm breaking out. We'll see what happens there. So within that, we've been long this for quite some time. Within that, I just wanted to mention that you're seeing single-digit stocks, and we've chosen a couple over the last week because I think all those very biggies is a little tougher to get into. So we have a stock, BBAI. BBAI is a symbol. Big Bear is up $1.10 at 822. I think it's going to try for the 872 recent high. We're at 509. That's the kind of thing right now that seems to be working. Have a wonderful rest of the day. Check out my opening call daily newsletter. I will see you tomorrow at 10 o'clock. Tommy will be on at 9. Have a wonderful day. And yes, thank you for being here. And thank you for being listeners to TFNN.
Building wealth